Hey, welcome back to See Today Business. To invest in stocks, investors need to know what the numbers behind the companies. One of them is the book value compared to the share price listed at the stock market. Now, book value per share will guide investor to understand if a stock price is overpriced or is it underpriced. Book value per share is the ratio of equity available to common shareholders divided by the numbers of outstanding shares. These figures represent the minimum value of the company equity and measure the book value of a firm on a per share basis. If a company's share is valued below 1 time of its book value, then it could be considered undervalued. Now let's discuss more about the BVPS with the personal finance enthusiast we have here, Dani Rachmat. Dani Rachmat, the personal enthusiast. Thank you so much for being here. We're gonna talk about BVPS, which is, I'm guessing, is the reason when somebody say, is it expensive? Is it cheap? This is the guide that we're gonna use.
Yeah,
all right.
This is how we determine whether it is expensive or cheap, undervalued or overvalued.
So it's not the price like, oh, is it only like 50 rupiah per share, or is it 1,000 per share?
Yeah, to say whether it is cheap or expensive, we have to know the value.
The value.
Yeah, the value of the share, right?
Okay.
And to know the value of the share, we need to know how is the book value per share.
Per share. All right. So we're gonna go ahead and count that. So we already talked about the book value on the previous one. So now we're gonna see how we're gonna use that book value.
Yes.
So first of all, we have this price to book value. Is the price per share divided by BVPS. Yes. But first of all, we're gonna discuss about the BVPS first. All right. So let's go with that. All right. On that one, so BVPS right there.
Yes.
So how do I calculate this?
So book value per share. Actually, the formula is quite simple.
Yeah.
The name itself already described. So book value, we already got the book value, the equity value of the company.
Yes.
So here we have the book value or equity, right? Per share, so that we have to divide the book value with the total outstanding share.
Total of outstanding, that means like how many share or how many stocks is out in the market.
Yes.
That's including the one that the company actually hold on for themselves, is it not?
Yes.
Okay.
If that stock is regular equity that is also tradable.
All right.
Yes.
So this will get you this numbers.
Yes.
And then the price per share, where can we get the price per share numbers?
Easy. You can just open your what is it? The app that you use to buy or sell your stock, to trade your stock, and then you can see the price that is listed there.
So whatever the current price, which is,
yes,
it can go up,
price.
not just daily, like every minute can go up.
Every second.
Or it can go down.
Yes.
Hopefully it's not gonna go up or down drastically, but at the same time, thankfully in Indonesia there's a limit, like you can go up mostly 25 to 35%.
And then
or
go down also, yes.
At the same numbers. All right, so let's see some examples. So we've been going through some numbers with Apple, Microsoft, and Tesla.
That we can see more clearly how to use this.
So let's stay with that one. So let's take a look at Apple right now. So price to book value and share and basic EPS. Which one should we look at first? Should we look at the EPS first?
EPS, yes. We should look at the EPS. The basic EPS, this is $6.16 per share, right?
Okay.
This is for Apple. While for the industry, the EPS would be 252.92.
So what does that mean?
That means that if you hold Apple, meaning that the company only give you $6.16 per share, while the industry can give you $252.
Oh, that's
way lower.
Way lower, yes.
Way lower.
All right, that's interesting to look at. But again, we're not only deciding on EPS alone. So what's next? Do we look at the book value or we look at the price to book first?
Let's look at the book value per share first. Book value per share for Apple, for each share, the book value is $4.76.
All right.
While for the industry, it is $5,438. Way lower. I don't know why cost this number. Maybe there are some companies which has the enormous book value with little small total outstanding shares in the market.
Oh,
so that is why blended results.
Again, when we talk about the industry, we can talk about so many companies that maybe some of us even never heard of. even when we know Nvidia, like we kind of know like lately, but it's been growing drastically. All right, let's look at the price to book
and
value
then, okay, compared to industry, apparently book value and the EPS of Apple is way lower, but then price to book value, when we see the industry, price to book value, the industry of the same industry with Apple, it is traded at 28.8 times.
Okay.
While we see that Apple is traded 35.5 times. If we see that the two categories below, it is like unlikely. How come a company which the result compared to industry is way smaller
have a higher?
Yes, have the higher price tag here, traded way higher compared to the industry.
To the industry itself. So this is compared at the moment right now. It's overpriced compared to the industry.
Compared to the yes.
Not even compared to the book value itself.
To the book value itself, it is traded 35.5 times out of the $4.76 per share.
Okay.
So that we can learn that the price may be around 35.5 times 4 is 0.5 times 5 yeah.
Okay.
Maybe around how much? 150. Maybe up until $200 per share.
Per share.
Yes.
Oh, okay. That's a bit overpriced for what they
way overpriced.
Book value.
It's like you are buying something with the value only $5 and you pay like $200 for this each. Yeah.
All right. So again, just disclaimer: this is only informational only. We're taking a look. So before I go to Tesla, I want to look something similar, which is Microsoft. So Microsoft.
Yeah.
So let's go to the EPS right now.
The EPS also lower compared to the industry.
Right.
And then the book value per share also lower compared to the industry, even though the difference is not that big.
It's not as wide as what we saw on Apple. Sorry.
Apple. But then when we see the price to book value, compared to the industry is 13.19 times of the book value,
yes.
the price tag of the blended shares there. But Microsoft only traded 11.65 times compared to the industry.
All right, so
compared to the industry, it is still cheaper.
So compared to the industry itself, we can consider this because most of the companies that's similar to Microsoft, they're trading at
13 times.
At 13 times, while
the book value.
While the Microsoft is
only
at
11. Only 11 times.
Oh, I love how you say.
But you have to still remember that more than one of price to book value, we can say that it is sold at premium. Already more expensive compared to the book value.
Because as an explanation before, so everything is above 1 time of their book value.
Yeah.
We already consider that overpriced to the book value.
To the book value.
But again, we not only look at the book value, you want to look at the industry itself.
To the industry, to the story of the company and everything.
And then that's why you're confident to say 11.65 is still, even though it's way more than the one time.
But it's still considered cheaper compared to the industry.
To the industry. So if so you want to have the basic of like what's the industry is doing, and then how's the company doing compared to the whole industry itself. So you need to find out what comparable to Microsoft and then see if that's what you want.
Which company that is comparable and which company that you should buy after comparing the price to book value.
All right. So again, disclaimer: this is nothing to say like you should pick Microsoft or
it is not
Apple.
Recommendation.
Right. We just want to see how is the price to book value, and then it looks like it's actually lower. So really quickly, we're gonna look at the Tesla if we're able for me to get out of this.
Maybe the arrow there
doesn't look like it's working right now.
Oh, maybe this one.
Oh, yeah, it's right there. All right, so Tesla. We have it right there. So Tesla.
Yeah. Tesla, yes. We see that compared to the industry, again, the same with the previous two. And then compared to the industry itself, the price to book is way higher.
Way higher.
3 times higher than the industry.
That's interesting. I wonder what Tesla is compared to. Is it compared to the traditional car makers, or is it compared to up-and-coming?
There are already several companies in US that producing the same
type
of a vehicle with Tesla. So it's 3 times,
All right, great. So again, so when we're looking at the okay, I don't know why you jumped right over there. Go ahead, and one more.
Where should we go?
We can go right here. So we already talked about how to scheme it, EPS, the book value again, and then how the PBV to make sure if we know like if it's too much.
Yeah, too much or too low, or this is time to buy, or should we wait?
Should we wait until lower? Or if you really love the company, then again, the options up to you. Talk to your financial advisors on what you're gonna purchase. Danny, thank you again so much. Hope you guys we can learn more on that one. We have more. Next one is going to be talking about the price earning ratio. All right, with that, we are going for a break. When we return, our daily recap from the stock market you don't want to miss. We'll be right back.